Greetings traders, this is Houston Trong from the tradingedge.org, and here is your weekly market outlook for August the 19th to 23rd, 2019. And if you thought this summer was going to be a slow summer, it has been anything but, and this week was no exception. So the volatility this week was very, very high for the summer season, and in fact the indices logged some of their greatest losses in recent memory. So for the coming week, we are expecting less macro news. The big thing this coming week is that on Wednesday we do have the FOMC minutes where we're going to get to see more of the verbiage around the last Fed decision. In the meantime, of course, the Fed is having their annual Jackson Hole meeting next week with the Fed chair talking and perhaps making some commentary about their rate decision last month. But let's wait and see what he has to say on Friday, the 23rd, as Powell is scheduled to speak that day. So there may be some market-moving events or market-making news that day. As for earnings is slowing down a little bit this week. But we do have some notable names on Monday. A bunch of Chinese companies are reporting. We'll want to watch out for that because that's going to be something that's going to potentially move, the Asian markets or vice versa. And the Asian markets have been a really, really good kind of canary in the coal mine as a proxy for global growth. So we talked about the importance of a name like BABA the last couple of weeks, and we'll talk about BABA later on in today's video. But on Monday we do have Baidu, IQ, and WB reporting, so all notable names. On Wednesday, it's kind of a slow earnings week, but on Wednesday we do have ACB, so a marijuana name. That'll be interesting to watch. Marijuana names have been really beaten up, and we've been watching those as well. And we talked about the hot mess that they are. We'll talk about that. And on Thursday we have some names like CRM or Salesforce.com reporting, and that should be notable for the tech sector. So with that said, let's launch into the charts now and go into the week that was, and we'll try to look into our crystal ball and see where things go from here. Now, as you know, if you've been watching these videos, I'm pretty, for the past few weeks, we've been dead on with some of the market calls. But of course, I don't think you need to be successful you don't have to be a successful market predictor or a person who tries to predict markets to be successful in trading, because those two are opposite to one another. So again, the purpose of this weekly market outlook video is to give you some context around some of the moves that are happening, and then simply at the end of the day, we're just following price. So we're not trying to predict and get in front of price here. All we're trying to do is follow where price is going to lead and let price be our partner in that. So with that being said, let's launch into the charts and talk about, firstly, is VIX, because VIX has been on a roll. Now, right now, I'll talk about the VXX contract, which is of course the ETN, but I'll quickly switch over to the VIX futures contract because that gives you more information. But right now, what you don't see with the VXX contract is, as I said in the last video, is that you don't see the pre-market and after-hours data. So that is significant because there is price being transacted, or there are trades that are being transacted outside of these ranges. Because what you don't see here on the monthly chart is this is actually an inside bar reversal, right? So inside bar down, reversal. You don't see that in the after hours market. It actually took out that pivot high. So this pattern is actually complete, meaning the pivot that it had to go after was that pivot there, and it did it. There were sellers who had stops there, and they got stopped out. Ultimately, this week what we saw was, we're still playing inside this bigger inside bar reversal pattern on the monthly, and on the weekly, what we had here was this situation, a green week. But now the green week, it's a very long shooting star. So the sellers could certainly come back in next week if you have any bullish continuation for the indices. Then, if we take out the low of this past week's low, that's going to pull things back into the range again. So watch out for that particular level there. So I'm just going to draw that level here. I'm going to move our levels around a bit now. I'm just going to draw it right there. So that's what you want to be watching out for. So this week's low to get taken out, and that could allow us to come back into the range. Maybe not all the way back down to the prior all-time lows, but certainly you could retest this quarterly open right there. Okay. So nextly, what we've been watching for, and I just want to show you something here. I'm going to just go back to my daily chart. This is what we saw happen on Thursday. So on the daily chart, if you recall it, it's been about a couple weeks ago, maybe a week ago, I drew in the green line here. That was basically an unfilled gap, and we gap filled that on Thursday. So basically it came right up there, you know, when it went slightly above 30.73, which was the gap, filled that gap. That wasn't open for a long time, right? That was back in June, and then it came right back in. So that was really nice trading, because if you understood that level, then you weren't going to chase anymore. Because if you look at it on the 15-minute chart, right there. Okay, so scroll in here. So it goes outside bar, up, up. It cracks 37.3, gap fills, and then as soon as that low gets taken out, they run out of momentum. So there are no more buyers coming up to continue this push to the upside. And as soon as that low gets taken out, this means that the momentum has dissipated, and then the natural sellers just come in as there are no more buyers, and take it all the way down, stopping everyone who got long in that sequence. So that was a very nice move on VIX, and you could have been a really good trade to get into. So going off now, I'm going to go back to the 2-day chart for a second. What you want to watch out for, as I said before, it's the same daily pattern on the VIX chart here. Okay, so here, outside bar, this is basically on Tuesday, right? Looked like everything was, was going to be everything was going to be a smooth ride for the index buyers until they did that on Wednesday, right? So that was basically a kicker pattern, because it closed down here, opened there, trapping a bunch of shorts. The mirror opposite on the spiders, as well as the other indices, as well as a bunch of other stocks. I'll talk about that in a few moments. But we had that bullish kicking pattern happen on Thursday, and we had that huge run up. This thing was up 13%, actually 13.85% on Wednesday alone. And then, of course, Thursday, I talked about it already, came up here, and then it pulled back. So here, same pattern, right? Outside bar, up, up. As soon as this low gets taken out, this means the momentum is dissipated, because there are no more buyers sustaining this upward momentum push. So I posted in my Slack room that I trade in, that I hang out in during the day, is that if this low gets taken out on the daily chart on Friday, then the bullish the bearish top is confirmed, and that's what we saw on Friday. On Friday, it gaps down once again, trapping anyone who's long this sequence, and then they just basically sold off all day to the tune of -5.5%. So really nice trading there on Friday. The indices were up very big. So let's just change gears now and talk about the VIX futures contract, because that is a cleaner looking chart, because we get the 24-hour or close to 24-hour market. And so there we go. There's your inside bar reversal pattern on the monthly, right? So it goes inside bar down. Once it took out that level there, it took out all these guys to the upside. So that, this pattern is complete in the sense that it took out everyone who had stops in that nearby range. So on the weekly, again, big green bar, but long shadow, right? So long tail, meaning if the low gets taken out here, I'm going to delete some of these lines here now. If this low gets taken out next week, or this coming week, then we can expect to come back into the range again, because look at the broad information that's being drawn here, right? So this has been something I drew a while back now. It's having a hard time staying above this broad information. So if it comes back into the range, we can expect it to come back through the other side. Okay, so on the daily chart, we've talked about that already on the VXX contract, but same thing. Outside bar up, as soon as this low gets taken out, like we saw on Friday on the VXX chart, boom, it's come back to the range. Now this low here, this bar's low, is the next pivot in play. So Wednesday's lows on the VX futures contract, that's the pivot that people are going after right there. Okay, so look, on the futures contract, it was down 11% on Friday, right? So really strong selling on Friday for the VIX futures contract. Let's change gears now. Look at the SPY, right? So the mirror opposite. So we see in the SPY. Well, this was the issue here. So it goes on the month. This is what I talked about in our previous July weekly market outlook video, as well as on the blog. Was you needed to watch out for this low, right? So that is July's low on the monthly chart. If July's low gets taken out, this is what you could expect to happen, because not only is it a technical pattern, but it's with full time frame alignment, right? So this blue line is your quarterly open. If this thing breaks below that and you start trading below the quarterly open, the monthly open, the weekly open, then all the time frames are aligned. You can expect this to happen. There's a propensity or tendency for price to react this way when those conditions are appear. So I like to call it temporal context, and a lot of people don't understand that temporal context and why things happen when they do. But if you just look at a chart like this, you zoom out a month, look, you can clearly see when you're trading below or above these blue lines, there's a bias there, right? There's a tendency for markets to move in certain ways, and that's what we're trying to do with this analysis, is not try to predict, but to understand the tendencies of the market so that we can trade the probabilities. So there you go, outside and up. Once that low gets taken out, it's come back through potentially the other side. Now, it did not break all the way down, take out that low yet, but we still have time, right, in the month, and this pattern is still in force. So right now, the bulls are in control for the short term, but they still have a lot of technical resistance overhead, which we'll get to shortly. Weekly, look at the weekly chart. Okay, so that is a doji. So a lot of indecision this past week, because the big news was, of course, the yield inversion, right? So the curve inversion, the yield curve inversion, or the inverted yield curve, and that was the big news this week. And whether or not that portends to a recession, that's up for debate. Some people say it's gonna, it's a very, very high likely signal. Others say it's gonna take, 1 or 2 years to play out. But certainly right now, that was the, of course, and the tariffs as well. That continues to be something in play. And market participants did not like that. So that was, we had some heavy selling there. But end of the week, very, very flat, only down. Look, less than 1%. So even with all volatility, we ended the week less than 1%. But now we've had, a red week here. This week went down, minus 3.4%, and this week was down as well. But again, in the bigger context, let's look at a 12-month chart for a second. Look at the SPY, right? So I'm going to hide some of those drawings for a second. There, the SPY is still up 15.58% for the year, and I think it's going to be very, very difficult for the bears to turn this into a red year. That they have less than 5 months left in the year to try to turn this into a red year. That would take a lot of selling. Not saying it's impossible, but the likelihood isn't there right now, especially since we're still in the top quartile of this year's returns, right? So we're still way up here. So even though there's bears coming out of the woodworks, it's not that big turnaround that's going to create some sort of crazy macro cycle yet. It's not there. What we see here, if I look objectively from a really long perspective, is look, outside bar, up. What do we know about that pattern? That's a momentum move to the upside. So how do you invalidate that momentum move? You have to take out a prior low. Okay, so this means this year it has to take out that low there. Okay, the only way this year could take out that low is for this bar to turn to an outside bar, because you've already taken out one bar's high, the previous bar's high. So in order to take out this bar's low, this year it would turn to an outside bar. Okay, and that's not as negative as you think. We've talked about outside bars many times in these videos. Even though it should be a big red outside bar, yes, that looks scary, but outside bars, as we've seen this past week, are not that predictor of doom. They're not predictors of doom. We'll talk more about these outside bars later on in this video. But there you go, outside bar up. Maybe next year, right, 2020, you open up wherever you open up in here, and then it has to take out 2019's lows in order for something to really big to happen for it to fall apart. Okay, so look, back in 2016, we did take out that bar's low. It turned into an outside bar. They still closed it green. Okay, so and then you know what happened the past 3 years. This is a red year last year, but that happened pretty much all at the end of the year. This year has been gangbusters, right? And we took out this high. So you have to go back a long ways. So that's 1 year, 2016, where we were able to take out a prior year's low. You have to go way back to here, 2008, right? Over 11 years ago now, before we were able to take out a low, a prior year's low, right? So that was the year you were able to take out a prior year's low. One of the reasons why you were able to take out a prior year's low was because this was a small bar. Okay, and you open up there, and it's not that much work as a seller to take out the prior bar's low. Here, you're way up here. What's the chance of you taking a prior bar's low? Very, very unlikely. So yes, there's potentially more pullbacks involved in this market, but for it to be a big macro cycle change, yeah, it's not in the picture right now. So keep your eyes open for that. So onto the SPY, just explain the price action really quickly. We said it already. Okay, outside bar and up. Okay, outside bar and up. It goes inside bar, and this is what I said last week. Now, this is going to be a potential area of resistance for many reasons, right? Because we know this is a momentum pattern. Momentum is outside bar up and has to keep going. As soon as the low gets violated, they're going to come back through the range, okay? Because that's just the nature of price. Because you run out of buyers, natural sellers come in. So what we had happen here was on Monday, they took it down and basically stopped out anyone who got long on this sequence. So this looked like a great day, right? On Thursday, last Thursday, it looked like a great day. It was up 2% on the markets. Inside bar on Friday, and then they gave it all up. So they basically spanked them. Now on Tuesday, what's interesting about that is that the buyer stepped up because Trump had said no, they're gonna have some tariff relief, and they did an inside bar reversal. So this is inside bar and down, looked very, very bearish, and then it went inside bar reversal and up. Now this worked because look. He took out all these pivots. He took out that high and that high. That's the nature of the inside bar reversal. It's going to go after immediate pivots. It did that. Did its work. Then the next day, this is when hell kind of came loose, was because it did that gap down, creating a bearish kicker pattern, right? So as I said, the Wednesday's lows were going to be in play. This guy's low here, because it's an outside bar, will be in play in this scenario. Outside bar and up goes inside bar. That's the pivot low you want to watch out for. That could go after, right? And so it didn't quite do it. So Thursday had a chance to do it, but it didn't quite do it. The interesting thing is this. So if you actually look at the SPX, it did it there. So there. Okay, so we'll just draw the line in. Right there. So the low here is 28.2570. The low there is 28.2550, so 20 cents, and they did the sellers here did exactly what they needed to do, and that is to take out these guys' lows, because everyone knew they had stops there, right? So they're gonna try to push it there and stop out these guys, and then it really hurts because you end up getting low ticked basically if you put your stop there and it shoots back up again. You're like, I can't believe that I got stopped out on that. And guess what happened? The folks who got stopped out here, they had to chase here on Friday to get back in again if they think the price is going to go back up. Okay, so that's the funny thing of watching these outside bars. So one other kind of interesting note is that I'm looking at the daily chart here on the SPY, and if you look at the pre-market data and the aftermarket data, it looks slightly different. So I'm going to go over to like a 24-hour chart here, and I'm going to turn on the extended hours data, and this is what you see. See, so I don't know if you see the difference here, but actually on Tuesday is actually an outside bar day. So on my trading view, when I do these videos, I usually use just end of day data. On my trading charts, when I actually trade, I actually use pre-market and aftermarket data, because I think I think that the transactions that are being transacted at those times are legitimate transactions, and I want to see them and include them in my analysis when I'm doing my trading. I don't always include them in my end of day videos because it just makes life more complicated, because sometimes people don't see the same things. So for the simplicity of these videos that I put out, I just use end of day data. But here is the interesting pattern if you were using the extended data, was this, right? So there's your inside bar reversal. I talked about that already. Inside bar down. You reversed it on Tuesday, excuse me, right? So actually not only did it reverse, but it was actually an outside bar. So now on Thursday, it did that bearish kicker to the downside, right? So gaps down and goes all the way down. Then what do you know about outside bars? This is momentum to the downside. Outside bar and down again. As soon as this high gets taken out, the momentum has been alleviated, all right? And that's what we saw happen on Friday. So as soon as that low gets taken out, boom, it's back to the upside again, because these guys are not going to come after that pivot. So this past Tuesday's highs, okay, so Tuesday's highs, that is now the pivot in play. That's what you want to be watching for, is that pivot high there. And you got a really nice gap that's just not filled right there, right there. So the buyers are currently in control. Look there, it actually bounced off the 200-day once again. But you know, you're gonna have some resistance, because here is your here's your quarterly open and here's your monthly open. So it's going to be tough for that. It's going to be a level you need to watch out for before the indices can get back up to these all-time highs. So you want to watch out for that, this area here. Okay, so intraday, I did make some posts in the Slack room saying, you know, if you were looking at the SPY intraday on Thursday, you could see the bottom being made here, right here during the day, because you had massive volume come in that registered some very, very high NYSE tick readings on the SPY or on the NYSE, and you could see it right in the SPY about the amount of transactions that happened and the price movement, and that thing just shot right up. And on Friday you had that continuation, so people got stopped out on the way down here, and made a lower low, stopped them out, and now it's come back to the range again, coming back through this side here. Would not be surprised once again to see price go slightly above this level here, maybe in this area, and then we'll see what happens from there. Okay, so now let's go on to the next chart. I'm going to go back to our daily chart here. Let's go back to our, yeah, that's fine. Okay, so let's go on to the Qs now, right? So let's talk about Qs. Actually, one more thing, as I'm talking about the SPY, I did post on my blog also on Thursday morning. I think the blog post said something, yeah, the title was overly negative, and that was the sentiment that I was getting going into Thursday, that I think we had hit a local bottom just because things had gotten overly negative very, very quickly. We had lots of, you know, sort of bullish activity. People were very, very optimistic, and then people quickly changed their tune about the markets in very, very short order. So from, you know, we had a real kind of change of heart at the beginning of August, right? Because the prices just basically swooned down. So here on Thursday, at the beginning of the session, I said I think we're getting overly negative here. And although I believe that the macro risks are still real and out there, I think just from a sentiment perspective, we may have gone a bit too far too fast. And one thing to back that up was this chart here, the S1FI, which is this blue line. If you have not heard me talk about it before, this is basically just the number of, it tracks the number of S&P 100 stocks that are trading above their 50-day moving average. And of course, that's the SPY on the candlesticks. So here, this past week, we registered a low here of, what's the low here? The low here was 20 something. So 20, let's say call it 21. So only 21% of S&P 100 stocks were above their 50-day moving average. That's the amount of damage that's been done in this month of August. Look up here. Look at the end of July. We were trading at 80%, right? So very, very quickly in the past 2 weeks, we've had, you know, a huge drop in the number of stocks above the 50-day moving average. So much that this level here, 21, is actually lower than May's low. And you recall the catastrophic, that's kind of exaggerating, but you recall the, you know, the deep pullback we had in May. It was quite steep and aggressive in May. Look at the pullback here. I'll just draw it here, right? So we had a 7, you know, let's call it a 7% pullback right there, 7.4% pullback in May, and it happened very, very quickly as well. This time around, let's draw in once again, from the pivot, from the peak here to the low, we had a 6.79% pullback. However, this time around, we had fewer stocks, actually we had more stocks below their 50-day, and it was even lower, this reading, than we had in May when prices were lower. So prices are still higher here, and this pivot high is higher than that pivot high. This pivot high is higher than that pivot high, right? So we have a bullish divergence in terms of sentiment now, in terms of the market internals. So fewer stocks are making lower lows, and so that tells us that the selling is waning. And so this, I think, definitely puts into a, you know, potential now for a multi-day, multi-week rally back to the upside again. So we'll just, you know, keep your eyes on that. Again, we're just going to let price lead and not try to predict where things are going to go. Just follow price. Now, let's keep going. Qs. So Q is very similar to the rest of the indices. Are actually very, very similar to the SPY. So I don't need to give you too much color on that. Qs, red month, basically doji week. That's all I need to know about that. The price action itself is actually very, very similar to the SPY for the Qs. Okay, so same pattern here. It went outside bar and up. it goes inside bar and an inside bar reversal, then back up again. This is actually an outside bar if you use the pre-market data, and did the exact same pattern as a SPY on the Qs. Over to, let's talk about Russell. Russell, slightly more bearish, but some of the buyers did defend. This is actually a more interesting chart, but it's buyers are stepping up where they need to right now. So on the monthly, here's the issue, right? So, and they basically did their job though. It went outside, inside on the monthly, and up. Once that low got taken out, right? I called it an inside bar reversal. It's going back to the other side. It's going to take out this pivot low. That was the target. And it did it this past week. It took out this low. So that was a nice breakdown because we knew that was going to be the pivot low they're going after. Here's the issue, right? For if you're a bull, this is what looked really bad. Is that this inside bar reversal on the monthly, as I was saying last week, if it works, it's going to trigger the inside bar reversal on the quarterly. So on the 3-month chart now, we actually broke that low. We're not above it though. That's the thing. The buyers did step up, so they defended. Yes, it cracked below there, but if price begins to transact back down here, below here again, bam, this come back to the other side. Right now, the bulls have stepped up and defended, so this pattern is not in play. But as soon as it breaks below this last quarter's low, the scenario is that this pivot there is going to get taken out. That's going to be the pivot they're going after. For now, the bulls did defend where they needed to prevent this thing from really falling apart. So on the weekly chart, this is what you want to watch for the coming week, right? So what you want to watch for is this level there. Oops. Outside bar, down, down. If the high gets taken out here, you come back up to the range. Okay, it's come back up again. You can have resistance from the weekly, the monthly, quarterly opens. If things go sour for the bulls and they break back down below that blue line there, that's going to flip things back into that big quarterly scenario I outlined here. We're going to take out this area and go back down here, right? So that's what you want to watch out for. Above this prior week's highs, bullish setup, right? Below here, watch out. We're going to go lower. Okay, but for now, buyers in control, as I said. Outside bar, big outside bar, right? On the green here, was green, doesn't matter. Doesn't matter what color it is. It's the next bar. Okay, so the next bar goes outside bar and down. Wipes out all these guys. Down again on Thursday. And boom on Friday. Once this pivot high gets taken out, it's come back up to the range. Okay, so that's Russell. Let's talk about Dow now. So Dow looking like the same thing as SPY. Outside bar and up on the monthly, and then coming back down through the range potentially now on the as we come back through that outside bar and up pattern. Weekly was a big outside bar. So what's the next bar, right? It's not a bearish bar because you want to know what the next bar is going to be. But it's exactly the same scenarios for Dow as you saw with the SPY. So here, this is actually an outside bar. If you look at the pre-market data, extended data, that's come back up to the range again. So same playbook applies to all the indices. They're all trading in very tight unison right now for the most part. Let's talk about TSX. Nothing much to say about the TSX other than it's having a losing month and week. So red month right now, down 1.5%. Still very tight stuff. Look how tight that is, right? You just see how tight this is. That's not a lot of fun trading. As traders, you want to be going where the action is. Right now, the American stock market's where the action is. This is very tight stuff, right? So look at the reason why that is because it's an inside quarter. Okay, so you see that inside quarter there. You're still trading inside that. So until we get out of that, it's you can make some money, but it's certainly less opportunity there. So red week, and again, just slowly working through this range. Okay, let's talk about emerging markets, as that's one we've been focusing on for a while, as it's kind of been, as I said, the canary in the coal mine. So here we go, inside bar and up on the monthly, inside bar reversal, took out all those pivots now, and now potentially coming back through the range down here. This past week though, they ended it with a kind of a doji, but it's a solid green bar there, and very similar price action. Outside bar up and back down, came back out, took out that bar's range, goes outside bar and down, inside. The sellers just run out of momentum. All right, so this is the situation once again. The sellers run out of steam. Once this high gets taken out on Friday, which they did, Baba helped on Thursday. Baba helped. I'll show Baba's chart later on. As soon as this thing pops up, traps these guys. Now they have to chase and cover their shorts if you're short from down here, right? So they gap it up and they they were able to gap it up right at the weekly open here and close above the weekly open, which is what causes that green weekly bar. So nice situation there for EM. Again, still trading below the quarterly monthly open. So still you're not overly bullish, but right now the buyer's in control, and you want to see if they can break below this low here to do an inside buy reversal back to the downside again, or here. I'm gonna delete this. We don't need to have these levels anymore. I'm gonna move this guy right there. Okay, and we'll delete this scenario here because that played out already. If it was a great short back on the weekly chart, right? We talked about it when it went inside by reversal and up, and it came back down to the range. That was, we were looking for. It did it. The job was, the pattern's finished. We'll delete that. And now, here on the short term, or yeah, it is short term, 2-day pattern, outside, inside. Which way does it resolve? Outside, inside, and up, or outside, inside, and down? That's what you want to be watching for emerging markets. Let's take a look at the TLT, because that is certainly the big story this past week are the bonds, and we've been talking about this man for months now. Once we saw that outside inside and up on the back in May, we were saying that is a big signal on the monthly chart, and it's come to pass, right? We were calling for all-time highs, and we've got them now. Those are all-time highs. It pulled back in a bit on Friday, but right now there's just basically no chance that the buyers are going to be able to, the sellers can turn this month into a red month, right? This is a 10% month up on TLT. The chances of this turning to a negative month is very, very unlikely. So TLT is going to have a good month, no matter what. I think I'll put it up there. August is going to end up being a good month for TLT, one of the best months it's had in a long, long time. So outside bar and up, this is a momentum pattern, right? Outside bar and up now. You simply want to watch the momentum. You don't want to run in front of the freight train. If you do, give yourself a small stop, because there's no point giving it a big stop because you're going to just get run over. So if you want to trade against the trend, you can do so, but understand the trend right now is up until a monthly low gets taken out. That's a big level. Here we go. Same thing happened here. I was actually short TLT back in here, and I did not jump back in. That's my own fault. Even though I called out the action. I was on vacation, and and before that I was getting ready for other things and had other stuff on my plate. Did not get back into did not flip and go long. But the signals were there, and again, congrats to those folks who did jump in long again, because there was plenty of opportunity. Outside bar and down, inside bar. There's your reversal pattern right there. It goes up. Once this high gets taken out there's your signal to go in. You can time it even better with using a lower time frame, like a daily or a 4-hour chart, and then this is a massive move to the upside. So right now, what can you say? Bonds are going up, right? So there's no reason to get in front of this speeding truck right now, because it is going up and up, all-time highs. In order for the sellers to start to show strength, you want to see a prior weekly low get taken out, right? So at the very least, that's when the selling would begin. The buying would begin to dissipate. But right now, there's no you need to see this past week's lows get taken out for things to get interesting to the downside. Right now, I'm not seeing that. Okay, gold trading very much in unison with TLT, and I am thankfully long gold names. So gold, GLD hitting some yearly highs here, as we can see there. As I've been showing in the past, if we take a look at the gold chart, this is what got me excited in the past. I think even on the I'll talk about the XAU in a few moments here, but most recently, there we go on the 3-month chart on GLD. It goes outside bar and up, right? So momentum now in gold to the upside. On the monthly chart, you have this scenario here where you have a big green month. So it's going to take a lot for the sellers to turn that thing into a red month. And we have a momentum move on the weekly charts. So you can see there in the weekly chart, outside bar and up and up. Again, you need to see a low get taken out in order for the buying to dissipate. So that level there, you need to watch this week in order for this low to get taken out and for things to come back, potentially back into the range again. Watch out for that. Entirely possible, right? So we're at the high of this particular broadening formation now. Now the issue is, if the markets start to rally and there's good news and there's less of a deflationary scare, then perhaps things come back in and we maybe come back down and get this gap fill. But for now, until that low gets taken out, you don't have to worry about that. The trend is up. Okay. So let's talk about XAU, because I think XAU, once again, just like what I talked about with the VIX futures contract, it's a 24-hour market, and this means you get to see more data. So XAU, very similar situation where you have the 3-month chart showing you this outside and up scenario, so momentum there. Month is clearly green, and for the weekly chart, same thing, outside bar and up, right? So momentum move, you want to see this low get taken out before you want to get too bearish on gold names. And finally, for the actual 2-day charts, this is what you want to watch out for this coming week. Right there, outside, inside. How does this resolve? Usually, if it breaks to the upside, I'd be quite bullish about that. The problem is that you're really deep in the Bollinger Bands here now. So how far can this thing go before it pulls back in, right? So this is what you need to watch out for, is that if you pop up here, it's going right momentum because you're right past and deep into the Bollinger Bands, and it really has to keep going. Unfortunately, once that runs out, the momentum, if it does come up here, it's going to come back in really quickly into the range again. So you need to watch out for that. If you're going long on this scenario, sometimes you're getting extended. Not saying it can't go higher, but the issue is that you've gone too far too quickly sometimes, and you can get natural mean reversion. So this could certainly go outside, inside, and back down again, and do that scenario I talked about earlier. We take out the prior week's low. That's right there. Okay, so that's what we want to be watching for on gold. Let's chat about oil now. And oil is having a rough quarter. So UKOIL. So here we go on the monthly chart, deep red month right now on UKOIL. On the monthly chart, this is what happened, right? Inside bar reversal. This looks a lot like the Russell, right? So here you have an inside bar reversal now, and they're going after that inside bar low right there. That's the pivot they're going after. Okay, so on the month, said it already, it's a red bar. I'm just going to draw that in really quickly so you see the level. The level that they're going after now is this level. I'm just going to delete some of these lines here. That level there. Okay, so that's the level that they're going after now because it took out the last quarter's lows. So now they're going after that pivot low there. Okay, and then after that pivot low, they're going to go after that prior quarter's low. Okay, so on the weekly chart, it was an inside week. Okay, but it's still a shooting star. So the buyers, they did step up here at the end of the week to kind of prevent things from really falling apart too badly. So Friday they basically fought back a bit and gave it a plus 3% day, but still closed near the bottom of that range, and it's an inside bar. So outside bar and down, inside bar. If the buyers step up and take out this prior week's high, we can come back up to the range again. But here, if it keeps going, it's going to keep going. that's the playbook there. So here on the 2-day chart, just watch for it, right? So right now you're seeing it already. On the 2-day is your inside bar reversal. Bar stepped up on Friday, so you're still not trading above. You're not trading below this bar's low. But inside bar up, it did break below that low, but it popped back up again to make it a green week, right? Because that's the weekly open right there. But on Monday, excuse me, if you come back down, break below the weekly low or weekly open, and it turns it red, and you're below that level there, boom, you're back in full time frame alignment to the downside. And you're already seeing some of this action on the daily, right? So daily, also inside bar reversal scenario. Inside bar up, goes inside again, and then down. So they're coming after all these pivots. They did it already, right? So they took out that low, that low, that low. They popped it up on Friday a bit just to save the week, to not make it a red week, but still very, very weak. Let's talk about Bitcoin and some of the digital gold names. And it's been beaten up, and we talked about this already, is that you're trading full-time from alignment to the downside now. So the intermediate bias is certainly lower. The issue is that you don't want to go full bear mode yet because it is still consolidating on higher time frames. So here, okay, inside quarter. All right, so it's not, did I get the right contract? BitPhoenix here, excuse me. Yeah, so here, inside quarter on Bitcoin, right? So it's not going anywhere because the chances of it taking out the prior quarter's range is very small because look, it was a 160% return quarter in Q1. How are you going to turn this, how are you going to turn it around? You're probably not, right? So the bears are doing a good job keeping things down, but you're inside the prior quarter's range. So it's nothing to write home about right now. Monthly chart, you're still inside month. So yes, the bears are in control, but you're still trading inside the prior month's range. So again, if you break below there, then that's when you start to break things down a lot. Right now, still inside month with 2 weeks to go. So green month still, red week. Okay, and what do we have here on the daily chart? Slowly drifting down. They're defending the month right now, right? So there's a monthly open. This is the only reason why it's a green month, is because the open's right there and people are defending the monthly open. But price-wise, you're trading below the weekly open, trading below the quarterly open, so mixed time frames. This is choppy trading. This is not the kind of stuff that you really want to get involved in if you don't want to trade actively on a lower time frame, because if you're just trading, on a daily time frame, this is just choppy stuff here this past week, right? It's kind of choppy. You're not going to make a lot of returns on that. So on the 2-day, again, same kind of choppiness. You can just see how tight that is. So wait for it to get out of this area, right? See the 3 lines, purple, that's your weekly open. Blue is your quarterly. Orange or yellow is your monthly. So you're sandwiched in between this stuff, which is why it's tight trading. And the rest of the crypto market is not much different. So we'll look at the total contract. Same thing. Inside quarter, inside month, red week, and trading. In this case here, it's actually trading below the monthly. So you got a red month right now. But again, you're still trading inside condition. So the bias is still, if you're gonna take trades, the bias, these are trades to go short. But right now, until it breaks that inside condition, you can expect breakouts to fail until you break out of the range. Okay. So let's do a quick recap on a few extra names, and then we'll call it a day. Let's take a look quickly at, let's say, AMD. AMD setting up something quite interesting in this coming week. The reason I say that is because it's held up very well given the circumstances. For all the China news and all that kind of stuff, it had some good reports coming out this past week, or last week, excuse me, about about their products and who they're going to be, who's going to be their customers. So that was good news. But this week here, they pulled it back. But look, it's just an inside week, right? So all that technical damage that was done on the indices for AMD, just an inside week. So outside month, inside on the weekly now. You want to see how this thing resolves, how it breaks this inside condition. That'd be interesting to watch. Apple, great pullback here, and for me, it's a buying opportunity. I picked some up this past week on Wednesday. And here's the bigger pattern on Apple. We got here outside and down. The prior week, there was a green week, and as soon as you break above this high, there's a potential for this thing to come back up to the range. And so here we saw happen on the daily chart was this scenario here. Inside bar and down. On Friday goes inside bar reversal to the upside. And then the target would be July's highs there. Okay. Let's talk about BABA. BABA was a name in play on Thursday, and it continued on Friday. BABA had their earnings on Thursday, and they popped up, right? They tried to sell it off, but it stayed strong, and at the end of the day, it actually closed very strong on Thursday, and it continued on Friday. So BABA, here you go on the monthly. Inside bar up, did a reversal, came back down, came back up again. So the bar has definitely stepped up here. Here's the weekly pattern. Outside bar and down. As soon as you pop above this high there, going back up to that range potentially. That's what it's trying to do right now. Trying to go and come back in and take out July's highs. The only issue right now, it ran into some support right there in the daily. All right, the daily right here. That's the month. This is the daily chart. That's the monthly open. There's the quarterly open. It hit there and it came back down, and it hasn't been able to close above there yet. But that was the nice reversal there, back to the upside on Thursday and Friday. Let's talk about Walmart, because Walmart was definitely attributed to saving the markets from selling off further this past Thursday. They had a huge a great earnings report. They beat on all their numbers, and the markets rewarded them by basically gapping up and giving them a plus 6% day. Now certainly the charts look decent. There's nothing wrong to be said about the charts. The only issue that I have with Walmart is, and why people think it's a knock against the recessionary call, is people don't usually shop at Walmart when things are going great, right? So Walmart is a non-cyclical name, but you're not going to do a lot of high-end shopping at Walmart. People don't flock to Walmart when things are doing exceptionally well, right? So yes, Walmart's doing well, and their numbers are great, and they're doing a good job of competing against Amazon. But I think it's the wrong name to be using as a proxy for consumer health and confidence. So anyways, Walmart itself, the chart looks decent. Inside bar up here on the quarterly chart. What can you say? Yeah, you had still a red quarter, but it did do this, right? So that's a 3-minute chart. Inside bar up, you're at those all-time highs. So nothing, bad to be said about Walmart here, until a low gets taken out. And we had that, low that happened here on the weeklies, right? But they bought it right back again with that gap up. So anyone who got short Walmart in here, right? Look, 1, 2, 3, 4 red weeks, and went lower this past week, and they all got taken out this past Thursday and Friday when things gapped up and kept going. So now we will not be surprised for this thing to come back to all-time highs, because you're not far away now, and I'm sure there's some bears with some stops up there, and you're really not far now from getting taken out. Okay, so Walmart quite healthy. What's not healthy is our marijuana names. I talked about last week. These guys are looking terrible, and it looks like it's getting worse. So this is the issue with like MJ names, right? So here I talked about MJ last week, which is the ETF. Inside and down on the quarter, right? So that's painful, because you're inside down on the quarter. You're going after that pivot low right there. Now that's the low that's potentially in play. Well, it's in play. Whether they can get it down there or not, we'll have to see if the news continues to support it. But right now, you're not that far off for that thing to go inside to take out that quarter's low. So very, very rough looking charts for marijuana names. This past week, one of the worst offenders was TLRY. They reported earnings earlier in the week, but man, the day they reported earnings, was a good reaction. But the next 3 days, frankly, were terrible. So look at TLRY. Here's the issue with TLRY, right? So you went inside quarter and down way back in January, right? So you already went inside quarter and down. It's done nothing since, right? Just going down. Can you say the trend is down? Yes, the trend is down on the quarter. So on the monthly chart, it went inside bar and down on the monthly chart. So this thing is going down. It got some downgrades on this past weekend. People are calling for this thing to go and trade at book value. So this thing could certainly go lower. It's momentum now to the downside. So continue to watch that momentum. Outside bar, what's the next bar, right? So you don't get overly bearish either. Just follow the price. So say, if you see the outside bar, if it goes outside bar and down, it's getting a little bit, it may be getting a bit overdone here. There's still a level for it to go after, but now it would not be surprising for this thing to pop up a bit, just because the sentiment is getting so negative. Because now it's momentum to the downside. Once momentum ceases, like this here, once you get this low, this high. Once this high here gets taken out, we saw back in June, then TLRY, you can do a decent. That's a 30% move there, right, in a matter of a couple weeks. So it would not be surprised to see a bounce like that again, as sentiment once again is getting very, very depressed. So if this thing goes outside bar and down, and then all of a sudden goes outside bar down back up again, bam, you might get in a quick 20-30% jump here, because these names are getting really, really beaten up, and I think there may be more. At some point you might just run out of sellers. CRON, another MJ name. Horrible chart, fun to watch, but here you go on the monthly chart. There you go, outside, inside, and down. So on the monthly chart, this thing is going down, down, and down. So marijuana names not looking sharp right now. Here's your big inside bar reversal. That's what we were watching for on the quarterly, right there. All right, so it goes inside bar and up. The buyers could not break it any higher up. Got that stalemate here at the inside quarter. And then it took it out this quarter, inside bar and down, and they're going after that quarter's lows now. So that's the level in play. That's what you want to be looking for CRON. Not that far off, from there to there. So that's very doable in the short term, especially if the sentiment remains the way it is. A couple more names, and we'll wrap things up. Number one is Celgene. Let's go to the monthly. Unfortunately, for Celgene, not looking good. So Celgene was looking good. Gilead's not looking good. So Celgene looking strong because of this scenario here on the monthly. Outside and down, back up again here. So we took out that last month's high, even in these rough markets, right? There's a chance for this thing to go back up here now and do this kind of return here, where it goes from this pivot high to there. not a lot of potential there, but roughly 5%. But that's maybe a sector worth watching because Celgene is something that's looking like it could outperform here. So Celgene, Gilead though is not doing so hot. It's kind of the opposite. It went inside bar reversal on the monthly, inside bar up. There, that low gets taken out. They're going after that low down here now. Okay, 62.18. So that level there in play for Gilead. And one last name, FAS. We're going long today. It was an eventful week. Lots of things moving around. So lots of stuff to focus on. FAS is the following. Here's the issue: outside bar and up on the monthly and down. So now, just like we saw in the spider, it's come back up down here, but potentially the target being this prior month's, or back in June's lows would be the potential target there. So right now the buyers did pull back, did step in on Monday, on Friday. So here in the weekly, it's momentum down, right? So we're looking momentum, outside bar down, down, down. The momentum's still down. As soon as this high gets taken out on the weekly chart, you can pop back up again. And this may be the catalyst here, as it looks a lot like a SPY. Outside bar and down, inside bar, it pops back up. So once this thing comes back up here and goes to that pivot high, that will cause the weekly to also, the momentum on the weekly to also break, and potentially causing this to come back up again. So watch for that. Once again, just like the indices, you want to see how it negotiates the quarterly and the monthly levels. But for now, the intermediate or short-term wise, the buyers are in control. You want to see if this pattern holds. Now this is all, the bets are off though on the bulls if they take out that low here, right? Because if it goes inside bar reversal up, it comes back down again, back through, then they're gonna challenge these pivot lows once again, pulling this thing back into this range down here. So watch out for that potential scenario. So as I was saying before, lots of stuff moving around. Again, your job isn't necessarily try to track every little thing that's going around and understand every single interrelationship. Pick your basket of stocks, right? Get your basket that you believe is representative of the overall markets that which however many that is up to you and what you're comfortable with, whether that's half a dozen or a dozen or more. But again, your job isn't to trade every single stock in the stock market. Your job is to make money, and that means having a very good understanding of price across time frames on the instruments that you want to focus on. Okay, hope that helps. Hope you have a great trading week, and once again, happy trading. And as always, if you find this video useful, please give us a thumbs up, and feel free to share with all your friends to make sure that they can be served in the work that we're doing here, and that we get a chance to grow our community even larger. All the best.